looking at that investor statement, Safaricom acquiring packet stream data and networks. Of course, the completion of this deal is subject to regulatory approval. But give us some detail to what exactly Safaricom's buying into here.
Well, I think what they're very keen to own is the last mile piece into corporate Kenya, especially Nairobi. If you think of Kenya, a great deal of the economy is concentrated in Nairobi, and I think Michael's missing leg, which he's now trying to acquire, is that last part of the solution into the office, and I think that's what this is part of.
Do we know at what price just yet?
No, not yet. I suspect, part of the listing, part of the rationale behind the listing was to create a currency, and I think that's what we're going to see, an all-share transaction. As yet, we've had no declaration as to the price.
Okay, well, would they have to make any infrastructure investments from what you know, or are they buying into already established infrastructure that's been deployed thus far?
They're buying into already established infrastructure that is being deployed. This organization is deploying infrastructure. So what Safaricom is looking for is it's running an acquisition strategy in order to own that last segment into the office, I think.
Has the market at all reacted to this news, Alhy? I mean, we know that the market in Kenya is often a bit slow to react to any company news. And in this case, we are looking at a deal that is still subject to regulatory approval.
It was actually the first day when I've seen more shares on offer than on demand. It was trading a little bit lower, down to 380. But I think that once the market digests the news, we shall go, 4 is near-term resistance, and I expect to push through there. So I think this is near-term, little bit of noise, lack of clarity on the cost of the deal, seeing some reflex selling pressure, but not too much.
Okay, let's take a look at leverage here. I mean, you highlighted earlier how this is a focus that's shifting now to establishing a more solid corporate clientele base. Do you see a shift in consumer base occurring as we move forward with Safaricom and as it tries to gain more leverage in what is becoming a very competitive space in Kenya?
Yes, clearly. I mean, you're absolutely right. The corporate space is very competitive. A couple of players have stolen a march on Safaricom. Safaricom's key competence is in the 13.3 million in the mass market subscriber base, but clearly they feel powerful enough now to go after this segment of the market where there are relatively high margins. And I think this was the missing piece of the jigsaw for Michael. And I think he's aggressively targeting that. I'm finding them much more aggressive on their pricing and on their end-to-end solutions, for sure.
A lot of this hinging on regulatory approval, and one of the bodies that needs to approve this deal is the Monopolies Competition, considering that this is the second data communication services company to be acquired, OneCom, of course, having been the first. Do you see them running into any headwinds as far as competition is concerned on the basis of this fueling any anti-competitive behavior? Because added to OneCom, Safaricom already has a stake in Teams and then is leveraging off a Ecom as well.
No, you're pointing out the business case for Safaricom, and it's a very powerful one. They have a piece of real estate everywhere. This was the missing piece of real estate, I think. I think this segment of the telecom space is highly competitive. We have Alltex, KDN in that space. We have Access Kenya. So from a monopolistic type of interpretation, I think it would be practically impossible to block it. So I think this is going to get the nod relatively quickly. And I think this is one space where we have a heightened sense of competition in Kenya at the moment.
There have been changes to the regulatory environment as well, hasn't there, where Safaricom now enjoys the benefits of its newly acquired unified license. What exactly does this, what kind of benefit does this afford them?
Well, it essentially lifts all the roadblocks in terms of the value chain and where they can play, and it makes it much easier for them. They've basically been pre-qualified in every aspect of the ICT telecoms business, and they can pretty much exploit that license much more quickly. They have no regulatory hurdle to really try and jump over each time they want to do an acquisition. It's like a green light to their strategy, and I think that's why you're seeing this flurry of acquisitions that we've seen in the last few months.
Of course, added to the news we've seen out today, I mean, we recently heard news that newly rebranded NTV had partnered with Safaricom as well to offer internet TV content to its mobile phone subscribers. Ali Khan, what have you made of this strategy and Safaricom employing a new partnership in this realm?
Well, it's very interesting, and I would also refer you to the fact that they are seriously probably the biggest bank as well. But when it comes to delivery, I think we have a multiplicity of platforms now with the arrival of the cables, and companies need to look at innovative delivery solutions. And I think Safaricom already teamed up with DSTV and have proven that concept works. And I think NTV is trying to piggyback on that and look to deliver their content into the mobile phone. Really, the mobile phone is the communications tool of choice in Africa, and if you haven't got a business plan that exploits the mobile phone, you're fighting in a way with one hand behind your back.
Well, certainly Safaricom has proven that it is a very innovative company exploring all revenue streams at this stage of the game. On that note,